Welcome to Chain Reaction by Capital Copilot, your daily dose of the latest in cryptocurrency news, market insights, and blockchain trends. Let's get started. Gold testing 50-year resistance while Bitcoin retests critical support zones. Crypto mergers and acquisitions hit record $8.6 billion in 2025. Gold and Bitcoin are at historically significant technical junctures heading into year-end. Gold is currently trading around $4,500 per ounce after surging 70% in 2025. The precious metal is testing a resistance level against US money supply last seen in 2011 and the early 1970s, levels only decisively broken in the late 1970s when prices tripled. Bitcoin, meanwhile, has dropped roughly 10% year-to-date and is retesting support near April's lows, which also marks the prior cycle high from March 2024. Despite current weakness, Bitcoin continues to make fresh highs relative to money supply on each cycle. Cryptocurrency mergers and acquisitions reached a record $8.6 billion across 267 deals this year, representing a nearly fourfold increase from $2.17 billion in 2024. The Trump administration's pro-crypto regulatory stance, including the Genius Act establishing a federal framework for stablecoins, drove much of this surge. The largest deals included Coinbase's $2.9 billion acquisition of Deribit, Kraken's $1.5 billion purchase of NinjaTrader, and Ripple's $1.25 billion buyout of Hidden Road. Financial institutions are rushing to acquire licensed firms to accelerate market entry amid new compliance frameworks taking effect globally. Chile's newly elected president José Antonio Cast has sparked Bitcoin adoption speculation, but institutional structures suggest the country's crypto path will differ fundamentally from El Salvador's approach. Chile's pension system holds approximately $229.6 billion as of October. Rather than legal tender status, adoption will likely follow regulated financial infrastructure, including local Bitcoin ETF products, bank custody services, and integration into pension fund portfolios via domestic wrappers. Bitcoin whale deposits to Binance have collapsed sharply in December, dropping from $7.88 billion to $3.86 billion, a 50% decline in just weeks. Analysts interpret this as a constructive signal, suggesting reduced near-term selling pressure, since exchange inflows are a prerequisite for large-scale sales. Additionally, whale capitulation appears on pause, with realized losses from newer whale entrants that previously drove the price drop now flat. The European Union's new tax transparency law for digital assets, known as DAC 8, takes effect January 1, 2026. The directive mandates crypto asset service providers, including exchanges and brokers, to collect and report detailed information on users and transactions to national tax authorities across EU member states. Crypto firms have until July 1, 2026 to bring reporting systems and internal controls into full compliance. Non-compliance after that date can trigger penalties under national law, including asset seizure linked to unpaid taxes. Current market snapshot: Bitcoin trades at $87,460, Ethereum at $2,923, Solana at $121.59, and XRP at $1.86. That's a wrap for today's edition of Chain Reaction by Capital Copilot. We hope you're feeling more informed and ready to navigate the cryptoverse. Until next time, keep your digital wallets ready.